Hi, good week to all. This is Kelvin here again. Welcome to this week's latest edition of my weekly technical outlook on the major stock indices. So, as usual, I'll be covering the trend bias and the key levels to watch, the latest key levels to watch after we start to see the SPX 500 and the Nasdaq 100 making new high last week, and as well as the Hong Kong 50, the Japan 225, and the German 30 index for this coming week of 28th of June and 2nd of July 2021. So before we start, let's take a look at the disclaimer slides first. All right, so here we go. So before we start going into the usual technical analysis chart on the major stock indices that I'll share with you all, let's take a look at the raw momentum of the major stock indices across the globe. So what we could see is that last week on the US stock indices, starting from the US stock indices first, for the S&P 500, the Nasdaq 100, the Dow Jones Industrial Average, as well as the Russell 2000, we start to see a very, very strong weekly outperformance last week versus the prior week. So if you could recall the prior week, that means it's the week where after the FOMC, the Fed FOMC meeting, most of in fact, all the US stock indices tumbled into the close of the end of last week. All right, the end of the last prior week. That means we are talking about for the week of 20 for the week of 14th of June to 18th of June, where FOMC was on 17th of June, which is early morning, 2 a.m. Singapore time. All right. So what we could see is that if we recall that last week in my technical analysis weekly outlook, I did mention that yes, even though we start to see that drastic sell-off in the US stock indices and spreading across to the rest of the globe post FOMC, the overall medium-term uptrend hasn't actually changed because the key technical element still remains intact, and in fact, it is actually held up by the Nasdaq 100 index, which is actually the outperformance of the outperformance of Nasdaq. Yeah. So what we could see of technology stocks that is actually leading the fort. So what we could see last week over here is yes, if the movement of the major stock index plays out as expected. So what we could see is that last week there was actually a switch, slight rotation towards the cyclical, which is the Dow Jones Industrial Average, which I see that is pretty much healthy because if you look at the Dow Jones Industrial Average, if you recall in the last 4 weeks or so, it has been the underperformer where cyclical stocks got hit ahead of the FOMC. And after the FOMC, we start to see a reinforcement of the technology stocks outperforming cyclical stocks, right? So it's pretty much normal for the Nasdaq 100 to actually show a bit of slight underperformance. So last week they have 2.10%. But recall that it has been performing very well in the last 4 weeks, outperforming the Dow Jones Industrial Average. So what we could see is that it's a strong outperformance of Dow Jones Industrial Average, completely reversing its previous week loss. All right, so it's pretty healthy. I would say that we start to see a bit of ebb and flow between the different the kind of the different um, team play between the US stock indices from last week outperformance of heavy tech stocks, which is Nasdaq 100, now shifting to a little bit of outperformance in Dow Jones Industrial Average for last week. All right. So also very positive for the Russell 2000, benefiting from the rebalancing effect that actually also managed to reverse prior weeks losses as well. All right. So what we could see is that I want to take note on the okay, before that on the Hang Seng Index. So you could see the Hang Seng Index is actually solely perhaps we start to see a potential bottoming or a basing kind of formation after its drastic or a kind of a pronounced underperformance since the end of the Chinese Lunar New Year break, which is somewhere around mid-February. The Hang Seng Index has been coming down due to a very strong hawkish rhetoric from the China state planners, where they actually clamped down pretty harsh on the China big tech stock, and as well as they keep sounding a bit of alarm on the potential bubble that is surrounding in the mainland China market as well as the global stock market. So one thing I want to see over here is that perhaps whatever drastic impact on the markets, especially the big tech stock, towards I would say that stricter rules that is implemented by the Chinese authorities, more or less already start to price into the market, and we start to see, I would say that major big tech stocks, China big tech stocks like Tencent, Alibaba, Baidu, there you have a few called JD.com, starts to actually embrace or go with the wishes of the Chinese authorities on the latest stringent measure regarding about their business operation. And this lead me to actually say that if you look at the performance of the Hang Seng Tech Index, it has been actually performing pretty steadily in the last 3 to 4 weeks, and pretty much decent weekly return last week, which is 2.4%, above its prior week 0.61%, and also above the prior 4 week average. So you could see that now the prior 4 week average has really starts to actually consolidate. It's no longer showing a very, very negative sign. In fact, it's almost unchanged mark. And this is a moving prior 4 week average. It moves every week as new data comes in. And we start to see is that the prior 4 week average it start to base. And what we see is that last week performance actually surpassed its prior week and its prior 4 week average, which is actually supporting my potential view that the Hang Seng Tech Index, which is translating to the China big tech stocks, has more or less seen the worst. And we may start to see a potential multi-month kind of up move from here potentially. Yeah. Okay. So Nikkei 225 pretty much unchanged, still stuck within that I call it, it's a kind of descending range resistance. Later, I will highlight it to you in my technical analysis chart, the latest one on the K225, since printing a 31-year high in February. All right, so pretty much unchanged. If you look at the numbers, 0.5%. Prior week was almost unchanged. The prior 4 week average is 0.5%. So it's still at the consolidation phase. And one thing about the German DAX inside is, yeah, even though it's cyclical, kind of a cyclical, heavily weighted, but performance seems to be pretty muted last week. But one thing good is managed to almost reverse off its prior week underperformance, okay, which is actually triggered by the post FOMC impact, negative 1.56, and last week it reversed it partially 1.04%, and also above its prior 4 week average, which is almost at the unchanged mark over here. So all in all, it seems to me that last week performance was a pretty much decent, or rather, I would say it's a rather healthy performance to actually indicate to us that the medium-term uptrend for the global stock indices are still pretty much intact from here. All right, so let's take a look at the cyclical. Okay, not the cyclical, pardon me, the S&P sectors performance by breaking down into the 11 sectors in the S&P 500 index in the last 5 weeks. So this is the weekly performance from the start of 21st of June to 25th of June. So what we could see is a reversal from last week underperformance on the industrial. Now they actually take the top 3 spots. Energy plus 6.6%, financials plus 5.28%, industrial plus 3.04%, and you have information technology, not too bad. Actually, it's not at the bottom of the table. It managed to actually be on a mid table, which is a decent return of 2.35%. So if you stretch it out further to a rolling 1 month, okay, so a rolling 1 month is actually a month, keep on a roll. It's not kind of as a per se one month static. It's a rolling 1 month till 25th of June. So what we could see over here is that information technology is now creeping up at the top of the league. No change almost last week as a rolling 1 month as well, plus 4.84%, together with energy plus 8.37%. So what you could see is that energy is one of the cyclicals of value that is still leading, thanks to a very resilient bullish trend on the crude oil prices, which is coming very close to a 10-year high. All right. So for those who want to analyze what is crude oil, WTI, crude oil technical analysis outlook for the short term. So I understand that some of you all may be a bit concerned because of the OPEC meeting that is out on the 1st of July, this Thursday. I actually published my chart of the week, which is I focus on the WTI crude cash index on my Twitter page. So you could actually take a look at my Twitter page later towards the end of the webinar or of this video. I'll share with you how to actually access to or sign up, or what's my Twitter handle is about. All right. Okay, so with that over here, let's very quickly, let's go to the key economic data releases and events, as well as notable company earnings for this week. All right, 28th of June to 2nd of July, including of Sunday, just in case it's definitely data out on Sunday. So what we could see is I want to highlight a couple of interesting. It's actually a more of a PMI bit again. what we have is the China National Bureau of Statistics manufacturing and non-manufacturing PMIs data for the month of June. Okay, pardon me, I forgot to put it. It should be the month of June. Month of June. So this is actually compiled by the state government agency. Okay, out Wednesday, 9 a.m. Right, there you have a Eurozone inflation rate flash data on June. So inflation is pretty much of a key metrics right now, given that there's a lot of debate ongoing whether globally the current heightened inflationary pressure so far is it temporary or will it be sticky? Definitely, for those who are interested in or monitoring about the oil, will be OPEC Plus ministerial meeting this coming Thursday, and you have the China Taising manufacturing PMI. So this one is a slightly different from the MBS manufacturing PMI because this is actually compiled by a private organization, a private company that's being tasked to compile the PMI survey, and it also consists of more SME, smaller, medium enterprises in China rather than the state-owned one that is actually located in this MBS compound. Okay, so that will be out in June. Pardon me, out on Thursday. Okay, Thursday. So China Caixin manufacturing PMI for June, pardon me, out on this Thursday at 9:45 a.m. So the rest will be pretty much of a PMI data as well. So what's important for those who are trading in the FX market will be US non-farm payroll. So this is the key uh, employment data to actually take a look at the current status of the labor market in US for the month of this is for the month of pardon me, yeah, for the month of May. For the month of June. Okay, I didn't put out, it's for the month of June. My apologies, for the month of June. So it's at 8:30 p.m. on Friday. So all these timing are in Singapore time. Then followed by three notable US stocks earnings, Constellar Brands, which is a key consumer staples data. You have Micron, which is definitely a major US chip maker that we got to pay a close watch to for those who are interested in semiconductor stocks. As you know that the state of the semiconductor industry right now, we actually lack of supply globally. And we have a pharmaceutical company, really a part of a pharmaceutical, a lot, one of the major pharmaceutical pharmacies that actually deal with drugs distribution of medicine. Walgreens Boots Alliance, okay, which is out on Thursday before the market open. All right. So yeah, these are the kind of key economic data releases and events that I want you all to take note for this week. So let me flash it on for a couple of minutes, so that you all could take a look here. All right. So now let's go jump straight to our CMC trading platform, which is our platform that I use to chart every week the outlook for the indices that I want to share with you all. So let us start with one of the risk proxy, which is the semiconductor ETF. iShares Philadelphia Semiconductor ETF consists of the 30 major US semiconductor stocks in US. So what we could see since the low of 19th of May, which is the 392.50, which is also the 50 200-day moving average, I think as a support over here, it continues to push up and shape a series of higher high and higher low. Post FOMC 4 managed to stall at the 423.60 level, which was the former swing high of 7th of May, and as well as the 100-day moving average. And it starts to actually bounce up last week. So if you look at last week, right, it's pretty much strong, almost green every day of the week, except for Friday. It's a bit of profit taking as it approaches the current all-time high, which is of 5th of April at 449.73. Overall, no signs of a bearish configuration in terms of price action. That means there's no signs of a topish configuration that I got to be aware of. RSI, daily RSI that measures the medium-term momentum, also pretty much positive, holding above the 50 level, the 50% neutrality level. Okay, since the bullish breakout of this former descending resistance. Okay, so what we could see is that potentially it could slowly inch higher to test the next resistance at 458. Then a daily close above should take us much higher to 495, which is defined by a Fibo expansion cluster level. So overall, what we could see is that the major uptrend since 18th of March 2020 low is still intact. Medium term uptrend, what we could see over here will be the start of this period here, 4th of March 2021 low. It's been a kind of a trading sideway. Then thereafter, right now, it's actually attempt to actually shape a strong push up from the 200-day moving average and now about to retest its current all-time high. So what we could see over here is that from the 12th of February high all the way out down to the 10th of May. So this whole period here could be just a sideways consolidation after, so it's a sideways consolidation. So right now we could potentially see a start of a new kind of a medium-term uptrend, potentially within this major uptrend that is in place since 18th of March 2020 low. So overall, what it means that the risk proxy semiconductor ETF is still healthy, which is actually supporting the medium-term outlook from a positive perspective for the global stock indices. All right, so let us start with the go to the S&P 500. Let's do the daily chart first. So I could see the daily chart last week. If you recall, the S&P 500, we did highlight that potentially there could be a failure breakdown, a test, just a failure test of the 50-day moving average and as well as the lower boundary of this ascending channel that is in place since 23rd of March 2020 low, which is indeed, it turns out to be true. So indeed a failure breakdown. So I did explain in my video last week why I think that it's potentially a failure breakdown. And right now, it's last week, it actually indeed did a rebound after the start of the week, which is the previous week, 21st of last Monday. Okay, so everything turns out as planned. So last week, because last week what we did over here is we turned neutral. All right, so let me go stretch over here. All right, over here, daily RSI pretty much positive after a test on this ascending channel support. Okay, that is in place since 30th of October low 2020, which is also the 40% level. Okay, and right now it managed to go past above the 50% neutrality mark, indicating to us that this potential is indeed a failure breakdown, a fake move that actually, that sometimes due to this kind of quantitative trading strategy deployed by potentially by this, those short-term quants firm that is actually taking advantage of fund flow. So that could be another webinar that I share about. But nevertheless, if you go take a look at my last week webinar, I did explain in greater detail why I think that is a fake move, which indeed turned out to be true. Okay, so do we have? So what's up for this week? So last week, if we recall that we turned neutral between 4240 upper neutrality level. So it broke above the upper neutrality level. So it makes sense for us to actually flip back to a bullish bias again, using 4230 as my medium-term pivotal support for this week. So I'm looking for a further potential push up to actually test to break above 43 psychological level, then 4330, 4360. Then thereafter we may see a bit of consolidation before inching up higher to the top of this channel, which is at 4450/60 level. All right. So why do I say that potentially there could be a consolidation at 4330/4360 is due to the 4-hour RSI, which is coming very close to the extreme overbought level at the 80 level mark. Okay, so this extreme overbought level was last seen in October. Okay, 12th October last year. Okay, so it's pretty much significant level, close to more than a 6-month high. Because that's extreme overbought level on the 4-hour RSI. So what it means that what we could see that the current up move here, which is very strong, almost a V-shaped recovery since post Fed FOMC on the 16th of February or 17th of June, where we could see potentially a consolidation to take shape at 4330/4360, then before heading much higher towards 4450/60 level. But if we start to see a 4-hour close below 4230, then everything is game over for the bulls, and we start to see another round of messy decline again to come back down to retest the 13th of May low and 19th of May low, swing low area at 4050. All right, now moving on to the Nasdaq 100, which is the strongest outperformance in the last 4 weeks on the average. So still recall that we have upside trigger level at 4040, which is my quarterly outlook important level to watch in Q2. So that's why we need to have a weekly close above. So once we have weekly close above, we can be more confident in terms of probability to actually advocate for a multi-month up move. So right now, what we could see now is a multi-month up move has already been more or less been confirmed in terms of probability, higher probability, where give us a kind of further confidence to actually look out for further potential upside in the multi-week time frame, which is my weekly outlook. All right. So 4040 has been clearly taken out. All right. So what we could see is that the next resistance is at 40.435 slash 14,550. Okay. Then followed by 15,130 slash 15,300. So that's on the daily chart. So on a daily chart, the daily RSI also nothing pretty scary. Still pretty much positive, higher high, higher low, holding above the 50% level. All right, hasn't really reached the overbought zone yet. So indicate to us that medium term upside momentum is still intact, not really that overstretched. All right, supporting a further potential upside in the multi-week perspective. So what we could see over here is last week we have a target or resistance which is at 14,360 slash 14,435. So it plays out as expected, where the target or the resistance was met. Okay, so last Friday it 24th of okay pardon me, it's Thursday, Thursday 24th of June, it printed an intraday high of 14,432, okay, which is actually within the targeted resistance zone that we mentioned last week of 14,360, 14 slash 14,435. So no change. So what I see over here is that everything seems to be pretty much positive in terms of the technical element. Short term wise, yes, it's a bit overbought, came down now, still about to inch up again. So no signs of a bearish divergence once it hit the overbought level. What I mean by bearish divergence is you start to see over here a price shaping higher high and your RSI also doing higher high. Okay, so there is no bearish divergence. Okay, so indicating to us that the momentum here is doesn't slow down. It's still pretty much relatively healthy. So what we could see is that I will actually tighten the key medium-term pivotal support this week to that prior we call it major upside trigger level, now turns into a pullback support, which is at 14,040 level, which is also the lower boundary of this short-term ascending channel that I drew from the low of 13th of May 2021. So if we could look at it from a multi-week perspective, is everything seems to be pretty much intact in terms of the bullish tone. Look using 4040 as a key medium-term pivotal support, looking out for a further push up towards 14,520 slash 14,600. Then thereafter followed by the top of the ascending channel, which is 14,780, also confluenced by the 1.382 Fibo expansion level, in line with the 1.618 Fibonacci expansion level, taking from the different degree of Fibo level that I draw. Okay, so what about different degree is this the 1.61, the 1.618%, 1.618 Fibo expansion level is taken from the low of here, 13th of May, to the high of 25th of May, projected to 14th of June, okay, in black. The next one from a different degree is from the start from 4th of June, project it to the high of 15th of June, then project it down to the low of 16th of June, coming in at 1.382. Okay, so this is a confluence of different degree of Fibo level that is confluencing at the same level of 14,780, that make it more pronounced or more important, especially anchor it with a graphical resistance, which is the top of the ascending channel here at 14,780 mark. So those who are actually wondering how do I do all this Fibo expansion level, it's actually based on the principle of Elliott wave factor analysis. So hopefully I could actually share with you all my thoughts on that. So it takes a bit of time to actually explain all this concept or step that I do in my Trade Like a Pro series, which I featured in my YouTube channel. Okay, later I'll share with you how do you find our YouTube channel, CMC Singapore YouTube channel. Okay, so now quickly let's go. We covered the US market already, so still bullish for both. SPX 500 validated the multi-week up move. Then the US tech heavy index, the Nasdaq 100, uh, expect a further potential up move from here, where I titled the key medium-term pivotal support to 14,040. All right. So now going on to the Hong Kong 50 index. So those who actually keep a close watch on the Hong Kong index, they actually closed this morning because due to a typhoon warning, and they're up so far. So good. They're out open as actually announced by the exchange from 1:30 p.m. today. So all seems to be pretty much fine over at Hong Kong right now. Okay, so what we could see that last week, they recall that we attempt to play another push up to the upside trigger level at 29,575. So 29,575. Why is this an important upside trigger level? Okay, this is 4-hour chart. So let's quickly go through my. This is the yeah. Okay, so this is the weekly outlook. So you could look at this weekly outlook here. 29,575 weekly chart is the swing high of 28th of February that has refused to break since then. So this is definitely a key level. If if you want further upside, potential upside, we need to have a weekly close above this level. All right, to actually support further potential up move, okay, from here. So that's why over at the Hong Kong chart, right now we are back to here again. Okay, so in fact, right, if you look at the low of 25th of March this year, it has been doing a basing formation. Okay, some people call it double bottom, and in fact now it could be a triple bottom, given this curvature that we see during this is the post FOMC, post FOMC curve, nice bottoming curvature, where price action now attempt to push up to test the 2957 level again. Okay, so now what we could do over here is I would be more cautious right now because it's still trading inside this big bottoming formation. We would actually use potential any dips over here, perhaps towards 28,800, given the RSI is coming very close to the overbought level again. All right, and the extreme overbought level, what we have is, let me highlight for you, is this one. So far in the last 6 months or so, which is pretty significant at the 82% level. All right, still a bit of room to push up there. So what we could see over here is that if we could have a breakout from here, at least a daily close first to 29,575, then potentially we could see a further push up potentially to test the next intermediate resistance at 13,140. What is 13,140? Is actually this congestion level zone over here, and as well as the, if I were to draw a Fibo retracement, oops, yeah, it's taking the high. The I mean, this is the start of that post Chinese New Year sell off, all the way down to the low of 25th of March 2021, the 76.4% retracement, which is so at the 30,140 level. All right. So pretty much so right now it's still basing kind of a bullish, kind of a potential bullish configuration, but in order to see more substantial upside momentum, it got to have at least a daily close first above 29,575. Okay, which is the neckline resistance of this double bottom, or we call it now triple bottom basing configuration that is in place since 25th of March, which is close to 3 months already. All right. So now moving on to the Nikkei 225. All right. Nikkei 225, what we have for the Nikkei 225 will be pretty much boring. Why? Later I'll share with you. Now it's at the top of the 29,600 level. Okay, let's go up. Okay, Nikkei 225. So 16th of Feb high. This was the high of 13,284, which is so, okay, pardon me, 13,716. Okay, let me be more precise. Yeah, 13,716, which is actually a 31-year high. So every since hitting this 31-year high, it has been close to about 5 months already, trading in this kind of descending range configuration. All right, somebody call it can be a complex bullish flag, possible. 3 months. What's interesting over here is two times on the 13th of May, it tested this support at 27,500, which is the 23% Fibo retracement from the low of 16th of March all the way up to the 31-year high of 16th of Feb. Previous swing low area of 1st of February 21, as well as the 200-day moving average. Post FOMC tested again very closely at 29,500, printed a low of 29,769, give or take. Also right above the 200-day moving average, and it starts to form a bullish hammer candlestick. Can you see this hammer candlestick? So what's a bullish hammer? Is a bullish candlestick that is indicating to us a change in sentiment. especially we start to see a prior candlestick, which is a Marabuzu, a long red candle, which indicates that the whole period here is very bearish. Opening price and the closing price towards the post Fed FOMC meeting, prices just pushed lower on 21st of June, which is last Monday. But towards the end of the session, it managed to actually hammer all the way up towards the and close above its open, all right, to form a green candle. So this is a very, very strong indication of a change in sentiment from bearish to bullish. All right. So right now, based on price action here, price starts to consolidate. 2 days of boring move, a very small little candle. Then coming to today's candle as well as a small little body. Why? Because it's now approaching a resistance level, which is the 29,600 level. uh, 1600 level over here, which is also the upper boundary of this ongoing descending range configuration that is capping previous bulls from breaking higher. So that's it, right? So what I do over here is definitely this level will be my upside trigger level to watch. So I'll be using 29,500 as my key medium term pivotal support for this week because I don't want to put anything in between like this range here, or else I get whipsaw. So I'll use any potential pullback, perhaps the intermediate pullback to watch will be at the intermediate support of 28,700 level, which was taken out last week. So at 27,500 as a key medium-term pivotal support to maintain my preferred bullish choice to play a potential breakout. So we need to have see a daily close above 29,600 to actually be more confident in terms of the odds to skew towards the bullish side to target the next resistance at 13,400, which is the former swing high area of 18th of March and 25th of February. Okay, so this is my plan or my strategy for the Nikkei 225 or the Japan 225 for this week. All right, now moving on to the German 30 index or the DAX. So what we could see is that the DAX over here managed to survive at the 50-day moving average. All right, okay, at 15,400 managed to survive. Then thereafter, the whole of last week, it pushed up, then it just traded sideways. Coming very close to the all-time high level again. Okay, so this is the current all-time high here, which is 15,800. Now it's trading at 15,700. About 200 more points to go to retest. So nothing pretty scary. One thing to me is in fact pretty positive with the test of this 50-day moving average and it managed to help above that. Okay, then also definitely with the RSI holding above a key support at 42% level as well. So last week I have a excess level slightly below the 14,400 because on an intraday basis, it actually went to the as low as 15,279. So I have a kind of an excess level at 15,200. So because the price actually never broke above the all-time high level at 15,805, so I will still maintain the 15,200 level. Don't want to tighten it so too much to 15,400 or 15,500. So still using 15,500 as an intermediate support level for dips, which is also the ascending channel support of this minor ascending channel that is in place since 1st of Feb 2021. RSI on the shorter term, pretty much positive, shaping a series of higher lower since it exit out from the oversold level on the 21st of June. So what we could see is still using the excess medium-term pivotal support level at 15,200. Intermediate support to watch will be at 15,500 for dips. Looking for a potential push up to actually test the next resistance at 16,700 slash 16,200. Okay, so all in all, right, what we could say over here is things are pretty much the same in terms of the medium term outlook. Multi-week outlook is still positive for the stock indices that I share with you all. No signs of a impending bearish reversal to say that the medium term uptrend has started to change to the downside. All right. So before we go, let me share with you that I mentioned earlier, right, where to find our stuff because I do publish other things on the social media space, which is the Twitter. So you can actually go to Twitter. Okay, so if you go to Twitter, you could actually register a Twitter account, or you already have a Twitter account, you can follow me by typing this. This is my Twitter handle at Kelvin SC Wong. Okay, at Kelvin SC Wong. follow me on the notification, that you're able to see my latest posts of the market. So the time I highlight earlier to all about the chart of the week, right? Yeah, this is the chart of the week, which is the WTI crude. All right. So you click on the chart. This is my chart. So cut the story short, if you want to have a further explanation of my why I have a feel that this is still bullish, click on the link here and read it through later. All right. Then now, I did mention that we also did to have I also published educational video on technical analysis. That means how to use integrated technical analysis tools or arsenal to formulate a trading strategy. Okay, so where do you find that? It's actually in CMC YouTube channel. All right. So if you go to YouTube over here, you type CMC SG. Oops. Okay. So just subscribe over here. Just click on subscribe and you'll be notified of the latest video that is out. So what you could see is that all my weekly technical outlook video is being posted over here as well under market outlook. So where do you find the educational video is you click on the playlist. All right, you click on playlist, you go all the way down to getting started in trading. So once you click on it, you're able to find this trading the markets. Okay, this is me, my last video, which is module 9. So I've created 1 to 9. So there'll be a total of 10 module. So I may be extended to 11 and 12 to incorporate other stuff like the Elliott wave approach and how to use practical Elliott wave to formulate a trading strategy. So that I may consider in my later modules. Okay, so nevertheless, there's this module 1 to 9, pretty much detailed. You quite trade the markets like a pro, from introduction to technical analysis to your building blocks about support and resistance, various key technical indicators that we could use, and most importantly, how do we combine technical indicators with other tools of technical analysis to actually formulate a proper trading strategy. Okay, so do take a look out at this educational channel. Lots of good content over there. Okay, so with that, thank you for your time and have a great trading week. And I see you all in my next video.